Hello everyone. Today we will learn about inventory regarding inventory valuation, regarding various types of the inventory and how it is presented in the financial statement. Inventory is the item which can be inflated or over valued, or it can be undervalued. So there is a chance for management override of controls through this asset. So, as an auditor, we have to ensure that the inventory is properly valued. So, because in order to increase or decrease the profit, management may overvalue or undervalue the inventory. We will also understand how the inventory valuation will affect the profit. Since if the inventory is on the credit side of the P&L, so if you increase the inventory value of the closing inventory, then the profits will also be overstated, and if you decrease the closing inventory, then the profits will be understated. So it has direct relations with the closing inventory. Profits have a direct relation, and with the opening inventory, profits have a inverse relation. So there are five types of inventory as we see: raw material, work in progress, finished goods, stores and spares, packing material. Raw material is something which will be going to use as a material in the production. Work in progress is the semi finished goods which are not yet fully manufactured, and the finished goods are those which have been fully manufactured. Then stores and spares, if there are two types of stores and spares. If the stores and spares have been used specifically for one asset, then for one fixed asset, then they will be capitalized as plant and machinery. But if they are the general use, then it will be treated as a stores and spares, and it will be considered in the inventory. Packing material, if the entity uses packing material in order for the finish to pack their finished goods, then also this is one of the inventory for the manufacture. But for the trading, there are only one items of the inventory. It will be the traded goods which the entity purchased in order to sell those goods. So what are the methods for the valuation? If we see, there are two types of methods. One is historical method and another is non-historical method. In historical method, if there are two types again. If the inventory is not ordinary interchangeable, it means the inventory is very specific. If for example, if you are going towards some car showroom where every car have a separate features, it is customized, then it will be specific identification method. But what if the car does not have a specific features, there are multiple cars, then it is ordinary interchangeable, or then we can use the FIFO, LIFO and the weighted average. So these all three methods can be used. We will check the example for the same. Similarly, non-historical method nowadays, for example, we can consider uh, example for demand. So they know the selling price of each item, they will reduce the profit margin and then they will get the cost. So this is the method which is used by the retail enterprise, which have number of items and the selling price is known and the normal gross margin is known, so they can calculate the cost for that item. So what we understood, there are two types of method: historical, non-historical. In historical also, if there is a specific identification, then we will go for specific. But if it is not, then we can use the FIFO, LIFO, and the weighted average first. And for the non-historical cost method, we will use the adjusted price. Basis of valuation, as we know, inventory is always valued at lower of the cost or NRV, whichever is lower. Cost, all directly for the cost calculation, we will include all directly attributable costs which are necessary to make that asset as ready for the sale. It can be manufacturing expenses, it can be conversion cost, it can be direct material cost, all will be included. But once the product is ready, whatever the cost for the storage, all these costs will not be included. For example, there is certain normal loss. So normal loss will be included in the cost. But for example, if there is an abnormal loss, it will not be included. Similarly, how do we calculate the net realizable value? Net realizable value is the selling price minus estimated cost to sell. For example, if I am on 31st March, I have to calculate the net realizable value. Then I will consider the what will be the future price if I sold that asset in the market. For example, I got 500, but I know to sell that asset I have to incur 5 rupees as advertising expenses, 5 rupees as packing, and 10 rupees as selling. Then my net realizable value will be 500 minus 5 minus 5 minus 10, that will be 480. Okay, yes. Then similarly, what is the inventory, which is for the ordinary course of the business? For example, plant and machinery cannot be considered as the inventory in the process of production. That means it will be considered as a WIP. For consumption means raw material. Maintenance supplies we already saw. Other than the machinery spares, I told you servicing equipment and standby equipment. Standby equipment are something, for example, there are I have one machinery, but I cannot wait if that machinery is not working, so I have the another machinery which I can use for the machinery, for the first machinery, if and sometimes it is not working. So these are the standby equipments, we will not be considered as the inventory, since they are part of the property, plant and equipment, they are not in the ordinary course of the business. Okay, yes. Now, so if you know cost of goods sold, how do we calculate? So the formula is opening plus purchases plus direct expenses less closing inventory. Then you will get the cost of goods sold. Cost of goods sold is the amount which for the sales of rupees. For example, for the sales of rupees 100, how much is the cost which I have incurred? So how do you calculate? First, you have to consider what is my opening stock, add all the expenses less closing stock, then the difference will be the cost. So once you deduct the selling price from the cost, then you will get the profit. I have explained this already earlier. If you have anybody any doubt, you can ask me. Why inventory valuation is important? Because it helps to ascertainment of the financial position. For example, liquidity ratio, it is calculated by current assets by current liabilities. So the current asset, if the inventory is overvalued, then the current assets will be higher and the liquidity ratio will be shown to be higher, but actually it is not. So it helps to investor to understand the financial position, so that the inventory should be properly valued. It is very important. Liquidity analysis, I already explained. Schedule 3 to the Companies Act require valuation of each class of the goods to be disclosed in the financial statement. This basically talks about the presentation and the disclosures. So it has to be disclosed. Each and every item have to be disclosed separately. For example, raw materials, work in progress, finished goods, stores and spares. What's first, also we have to disclose the accounting policy adopted in measuring inventory, including the cost formula used. So what are the expenses which we are adding to the inventory? That is the accounting policy which have been followed by the entity. Further, the entity whether uses FIFO, whether uses LIFO, whether uses weighted average, all have to be stated. The total carrying amount of the inventory and its classification appropriate to the enterprise, as well as the amount have to be stated in the notes. And then the basis of the inventory valuation, I have already explained you. It is measured at lower of the cost or net realizable value, because we want that inventory to be shown at a correct value. If there is a loss, then the as per the accounting standards, we should recognize that loss and the inventory will be valued at lower of the cost or NRV. Already we see what all the cost will be included in the cost of the inventory. This is one of the example which you can refer. Plus, if for one point more for the direct taxes, if the direct taxes have been refundable for indirect taxes are refundable, for example, custom duty, then it will not be going to be add to your part of a inventory. But these, if these duties are refundable, then not refundable, then you can include that duty. So, for example, raw material required to making 100 plus GST, so the price will to 11,800 is available as credit. So you can get the refund. It would be counted. It won't be counted. So we will not add that GST to the inventory. Hence, the cost of the purchase will be only rupees 10,000 and not the 11,800. Cost of conversion. So cost of conversion, direct labor, all these costs will be included in the inventory. Other costs, other admin to bring the inventory to the present location and condition will be included. What all costs are excluded from the inventory? So we will see abnormal amount of the wasted material. Abnormal cost, for example, because of the um, an inefficiency of the worker, we have used excess raw material in the inventory as compared to daily raw material which have been used. So all these are the abnormal costs. These abnormal costs have to be directly debited to the P&L account, and it will not be included to the valuation of the inventory. Storage costs, unless those costs are necessary in the production process prior to the further production stage. So if the raw material is stored for the purpose of the conversion, then it will inventory storage cost will be included. But if the finished goods are stored, then this cost will not be included. Then the administrative overheads do not contribute to bringing the inventory to the present location in the condition. Administrative overheads, for example, rent, office expenses, all these will not at all be included in the valuation of the inventory. I am again repeating, what all costs will not be added to the valuation of the inventory. They have to be debited to the profit and loss in the same year in which they are incurred. Same with selling and distribution. So what all costs? If I ask you, then your answer should be abnormal loss, selling and admin expenses, overhead, administration expenses, and the storage cost will not be included. Understood? Yeah. And again here the how the net realizable value is calculated. It is explained. So there are two types of inventory valuation system. One is periodic inventory system, and then the second method is perpetual inventory system. What we will do in the periodic inventory system, we count at a example at a certain date. For example, earlier this method is useful when the businesses used to count that actual inventory, whatever is in the stock. So how the cost of goods calculated, we know the opening, right? We know the closing, so we will also know the purchases, and whatever the answer we will get is the cost of the goods. But the problem is, with this method we cannot get the inventory valued at any time. It has to be on only once at the end of the year. So because of this, we will also not come to know what are the excess inventory used, what is the real time value of the inventory, which will create problems for the business, and therefore this method is not more such useful. Then the second method is, and these are also the suffer from various limitations. It requires more than once year inventory valuation, because inventory counting, because you want the age of inventory require closures, so you have to close all your normal operations for the purpose of the physical inventory count. Not possible to identify the loss of the goods. We directly take all the balancing figure as the cost of goods sold. So we were not able to identify what is the actual loss due to the pilferage. Pilferage means because of the damage, because of the pilferage, you can say similar to damage. Inventory control is not possible under this system. You will not be able to come to know the value of the inventory. So the inventory control is also not possible. Does books of account again does not reflect what is the value of the inventory, what is the today, because once the inventory value calculated, it's all calculated. So all, in order to answer all these limitations, there is some one other method which is mostly used by the business houses, today perpetual inventory system. So in perpetual inventory system, the system only updates the inventory. You don't have to do anything. You will enter opening, you will enter purchase, and reduce the cost of the goods sold. Cost of the goods sold, you know, by the system. So and then it will calculate the closing balance. So these are the differences. You can refer them and you can ask any query if you have. Historical methods, these are the methods which have been useful. I have already explained. You can refer the example and then we will go through the same. FIFO. In FIFO, whatever the inventory have entered first into the system will at the time of the sale will go out first. In LIFO, whatever the inventory that have been entered last will go first. We'll cover the examples in the next lecture. Now we will cover on the explanation part. Simple average price method. Whatever the purchases have been made till today divided by the quantity, you will get the average price, and then average price will be used as a cost of goods whenever the profit will be calculated from sales. Same with weighted average price method. Weighted average price method I have explained. Give me just a second. I will also explain simple average method, average price method. Only the price will be considered and then the number of the items will be divided by that. But in the weighted average method, entire cost of goods considered and not only the price. So this is the difference between the simple average and the weighted average method. All these are the examples which will be covering in the next lecture. I think it's done. These are the MCQs which will be covered. Mhm. These are the practical questions. Yes. So we are done with the explanation part. So if you ask me what does this inventory topic talks about, it talks about valuation, it talks about presentation and disclosures, it talks about various methods which can be used for the purpose of the valuation. If you have a doubt, any doubt, please let me know. There are five methods: SVC, FIFO, LIFO, weighted average, simple average method, and then specific identification also one of the method. And then for the non-historical method, we have a retail selling price method. And then we calculate how to calculate cost, how to calculate NRV. So this is one of the scoring index. I would say just it requires practice, and once you have read this, then there will be no queries. At the end, we'll cover the practical part in the next lecture. Thank you.